With higher rates for longer and inflation staying north of 4%, which UK companies and sectors have pricing power so they can pass on these costs? And then related to this question, someone also asks, are they currently undervalued? So I'm going to open that to whoever wants to go in.
I think actually one of the great things about equities is most companies do have some sort of pricing power, and most businesses in the UK, they're relatively mature. They've been around a long time. They can generally pass through cost increases, and we've seen that in the last 2 or 3 years as inflation's spiked up. We've seen in most industries are able to actually pass it through to the consumer. So you haven't seen a massive margin squeeze in general. There's clearly some industries that have regulated ability to pass through price increases, like utilities that have RPI type pricing, but it's more a question. But you have to look stock by stock at whether companies can pass it through.
Yeah, the more special they are, the more unique they are, they tend to have more pricing power. But I think the other side of the coin, the higher interest rate one, is also important, because then we would look at balance sheets, right? Because if you have a lot of debt, then you need to refinance. It's a bit the same like the mortgage story. So companies have that too. So their 3 or 4 year debt rolls off, and they, instead of paying 0.25, they're paying 6. Overall balance sheets in the UK are in a good shape. And again, it is a bit company specific. And I think particularly the ones who had a lot of debt, needed to refinance now, they've been punished severely. Companies who need to borrow in order to grow, so they don't fund that themselves. So that goes back to the capital allocation. They're also struggling because it costs them more to grow. So therefore, I think pricing power, I'm less worried, because frankly, we lived at 10% inflation, so 4% is still high, but it's gradually getting a bit better. But I think that interest rate side of things, I think that doesn't get talked about. What happens to balance sheet? What happens to investment opportunities? Maybe first we were, when interest rates are 0, you can do an investment and make a 6% return and it's fine. Now a 6% investment isn't fine because your cash earns you 5. So I think there's a lot of hopefully some great investments happening now, rather than maybe some wasted investment in the past that was just chasing a low return.